right time.
Good morning, you're watching All You Need to Know on Bloomberg Quint Live. I am Jayesh Khilnani, and on expiry week joining me is Agam Vakil on the show. But let's have a look at what can you expect this Monday morning from trade. Well, if you have a look at how the markets closed on Friday, the Dow Jones in fact extended its loss to about 3 days in a row and ended 200 points lower. The European indices largely closed positive. However, if you look at the Asian markets, the Nikkei has actually traded off the day's low and trading just about 20 points in the negative, while the Hang Seng has climbed about 50 points for itself. Now, if you look at the Shanghai, the SGX Nifty, that was earlier indicating a 50-point gap down, and that still stands, and indicating an opening close to the 10,550 mark for the Nifty itself. Now, as far as some of the areas are concerned, we had a mixed close for most of them, but largely led by the losers. ICICI Bank, that tumbled about 3.5%, followed by Tata Motors and Vedanta, which declined more than 1% each, and Dr. Reddy's also ended negative. As far as the gainers were concerned, some of the names from the IT space, so Infosys gained more than 1%, while we had HDFC Bank and Wipro, which also managed to climb for itself. Now, if you look at the cues that we are getting from the commodities market, no major cues over there as well. So oil is largely trading flat. Earlier it was down about 0.4%, but has pared its losses and trading just about flat for itself. Now, if you look at the base metal space, the base metal index in fact climbed for the 4th consecutive week. But if as far as individual base metals on Friday are concerned, we had lead and tin, which gained more than 1% each, and we had nickel, which declined more than 1.5%, with aluminium also ending lower. Now, if you look at the Shanghai Futures Exchange, most of these base metals have started on a positive note, except for aluminium, but that too has also recovered from the day's low, currently trading about 0.3 lower. If you look at gold prices, that has actually stabilized near the 1335 mark. Now, as far as fund flows are concerned, for the Indian markets, no major numbers coming in on Friday. So FIIs sold just about 20 crores, and the DIs pumped in more than 100 crores. For the month itself, the DIs have actually bought 5,600 crores, while the FIIs have withdrawn nearly 4,000 crores for themselves. Now, if you look at some of the key indices that we had, Friday's fall was largely led by the Nifty Bank, which actually declined 0.7%, followed by the mid-cap index, also 0.5% lower, while the small-cap index actually closed flat. Now, if you look at the sector gainers, on Friday we had the IT space, which was buzzing largely on account of TCS. So that index actually climbed nearly 5% for itself. Now, as far as the losers are concerned, we had the Nifty PSU Bank, which declined 2.5%, while the Nifty Energy Index also declined more than 1% for itself. Now, if you look at the India Wix, that actually declined about 5.9%, and going into expiry week will be very interesting to watch out how this actually plays out. Now, as far as the contribution is concerned, we had the IT names like TCS, Infosys and HCL Tech, which contributed to the gainers, while we had Reliance, ICICI Bank and HDFC L&T, which actually contributed to the negative. But Agam, what can we expect from the expiry week in the FNO series?
Right, Jayesh. Well, consolidation has continued. As far as last week is concerned, remains largely range bound. But when it comes to futures too, we really haven't seen too much change in open interest, despite the fact that we are moving into expiry. So that's the case as far as the Nifty futures go. And even in case of the Nifty Bank futures, very little change in open interest, as you can see here. But when it comes to the WIX, as one might expect, it has fallen further down, now below the mark of 13, and also the Nifty put call ratio remains around the same levels at around 1.61. We've also seen very big unwinding coming along in the 10,200 and the 300 puts. And we'll have to wait and watch whether or not this actually is a continuation of the trend that we started seeing last week. But a lot of changes in the F&O band. So we have Diwan Housing Finance move into the F&O band. On the other hand, we have RB Infra moving out, and a lot of stocks which were buzzing in trade. The entire IT pack did very well last Friday, and Mindtree was one of them. We're looking at some substantial increase in open interest towards longs. And on the losing end, a lot of PSU banks had lost out, and a lot of shorts building in, for the likes of Canara Bank as well, near 8% addition towards open interest. So a lot of stocks out there that we need to keep an eye on. But that's as far as our own markets are concerned. Let's now go across to Bloomberg's Paul Allen for the top global headlines.
ECB policymakers are said to be waiting until their July meeting to announce how they'll wind up the bank's stimulus program. We're told members of the Governing Council want sufficient time to judge if the euro area economy is overcoming its first quarter slowdown. Sources also say no formal discussions have been held on a rate strategy. The euro briefly dropped to its lowest level in 2 weeks on the news. President Trump is tempering the optimism about North Korea as lawmakers sounded skeptical about promises to halt its nuclear testing program. The president had hailed what he called big progress and said he looked forward to meeting Kim Jong-un at some point. Now, however, he's told his Twitter followers that things are a long way from a conclusion and things will or won't work out. Iran says it will restart its nuclear program if the US breaks the deal struck with the so-called Six Powers. President Trump campaigned on strong opposition to the 2015 agreement and has threatened to drop it unless what he calls serious flaws are fixed. The Iranian foreign minister says that would leave America isolated diplomatically and trigger, quote, unpleasant consequences.
Everybody has advised the administration that this is not a bilateral agreement between Iran and the United States, and withdrawing from it would be seen by the international community as an indication that the United States is not a reliable partner. Iran has many options, and those options are not pleasant.
Chinese telco ZTE has told the Hong Kong Stock Exchange it's taking steps to resolve the US tech ban that the company says threatens its survival. ZTE is being blocked from buying American components for 7 years as punishment for exporting equipment to Iran and North Korea. The company says the ban could hurt its global business and that it's working with relevant authorities to find a solution. Global news 24 hours a day on air and a TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
This is pitting the S&P 500 tech sector in white against the S&P 500 index as a whole. And you can see ever since year to date, the white line has pretty much stayed up over the blue line. The yellow line here shows the differential or the spread in between both of them. It has come off just a little bit when we saw its high around mid-March, but it's still doing pretty well relative to the S&P 500. So basically, if you were in the long with the S&P 500 tech sector, you would still be winning against the S&P 500. Let's dive just a little bit further in because, let's be honest, we want to take a look at what the FANG stocks are doing, right? The FAANG stocks. Which one is the best? That here is Netflix, 70.75% higher year to date. Now this, of course, we know just got a recent pop because it just clocked in 125 million subscribers globally. It beat the estimate by about 1 million in terms of the growth that we just recently heard from. Now, one of the other ones that we're also looking at is Apple, that in red, taking a turn for the worse just recently, of course, especially from TSMC saying that the semiconductor chip sector is not going to be doing so well because it's seeing its growth forecast not getting a little knock-on effect from those iPhone sales. Very quickly, let's flip up the screen one more time because I want to show you what we're looking ahead to in terms of this next week. When we go and show all of them, guys, Alphabet coming in on April 30th for Monday, and then afterwards we're going to go ahead and get Apple on Tuesday here in the United States, and then quickly filling in the rest of the screen here, guys, Facebook and Twitter May 2nd, and then we get a smorgasbord, Amazon, Samsung, Microsoft, and Intel on May 3rd. A very big week ahead. We're just getting started.
stock of the day is CDSL. Well, it's one of the two depositories in India and also the one which has been listed. The stock is expected to react on the back of strong set of operationally good quarter. If you look at the top line performance, we're looking at 35% jump at a number of 52 odd crore as compared to nearly 38 crore that we've seen in the corresponding quarter. Profit figures have come up by 10%. There's a modest increase there at a number of 26 crore as compared to nearly 23.5 crore that we've seen in the March quarter of the previous year on consolidated basis. Operationally, it's a strong quarter for the company. We're looking at almost a 54% jump at a number of 29.5 crore as compared to nearly 19 odd crore that we've seen in the corresponding quarter. Margins have also expanded to 57% as compared to nearly 50% that we've seen. So what has led to an operationally strong quarter is lower employee expenses and other expenses. They as a percent to your net sales have fallen. The main decline is coming in from other expenses, which as a percent to your net sales has dropped to 19.8% from 24% that we've seen in the corresponding quarter. Also, employee benefits as a percent of your net sales, that expense has also come down to 18.5% as compared to nearly 21% that we've seen in the March quarter. Besides that, a strong tax outgo, the higher tax outgo has what has led to a modest performance coming in on the bottom line front despite the cost optimization measures. If you look at the tax expenses, they've almost shot up 2.5 folds to a number of 11 odd crore as compared to nearly 4.19 crore that we've seen in the corresponding quarter. Also, if you look at the revenue breakup, depository activity which forms nearly 79% of your overall net sales. That number has shot up on year-on-year basis for this company to 24%. Data entry and storage business, which forms roughly 19% of your overall revenue, has also risen by 39%. And if you look at the strong growth that we've seen on the EBIT front, that you'd see depository activity again as a major contributor with a percent of more than 75% in your overall EBIT mix. That percent as a number has gone up by 32%, while the data entry and storage business has also risen 22% for this company. Besides that, it's a healthy balance sheet that we're looking at, and the company has a diversified revenue stream which makes it and one of the hidden gem for which the HDFC has also initiated a buy report a month back on this counter.
Let's get your check on the commodity space, starting off with oil prices, which were trading about 0.4% in the negative, but however have recovered and currently trading flat. Now, this is on the back of US rig count, which has surged to a 3-year high. For last week, the US actually added 5 rigs to take the total count to 820. Now, one would have expected that oil prices would have shown a large move, given that the US president slammed OPEC for inflationary oil prices. So we'll have to wait and watch how this trade actually pans out. Moving on to the base metal space, the index itself climbed for the 4th consecutive week on London Metal Exchange and surged about 4% or thereabouts. Now, this was largely led by aluminium and nickel, which surged on account of the disruption in the global supply-demand scenario on account of the sanctions being imposed. Nickel posted its biggest weekly gain since the month of Feb, however ended about 1.6% in the negative on Friday. Copper gained about 2.5% last week, and that was the biggest in the last 2 months. However, if you look at Friday's close, lead and tin actually closed more than 1% higher for themselves. Now, if you look at the Shanghai Futures Exchange, most of the base metals except for aluminium have started on a positive note. As far as precious metals are concerned, we have seen some bit of stability come about for gold prices near the 1335 mark on account of the dollar index, which has actually posted gains for the 5th consecutive day.
Well, amongst the stocks that we are tracking includes earnings which were posted after market hours on Friday, starting off with Indiabulls Housing Finance, where the net interest income grew by 22% and net profit grew by 22.6% to 1030 crores, in line with the Bloomberg estimates, so broadly in line numbers. Provisions, on the other hand, did see a rise to 326 crores, but the good part is that when it comes to asset quality, the gross NPA number remained unchanged at 0.77%. The AUM growth for the quarter came in at 34%, in line with the 30+% trend that we've been seeing for the housing finance company over multiple quarters. That apart, you also had Saskin Technologies, another mid-cap IT company, posting numbers While revenues did see a marginal dip of 2.5%, net profit grew by a strong 27%. EBIT on the other hand rose by 31%, with margins also seeing a significant expansion. So the performance in line with what some of the other mid-cap IT companies have done so far this quarter. That apart, we're also watching out for a couple of pharma names. Cipla is one where the company's Pithampur plant is said to have received 3 observations from the US FDA. That apart, you also have Unichem Labs, where they have said that the US FDA inspected the Ghaziabad facility. The inspection has concluded and they've not received any observations, so that probably is a more of a positive development for this company. On the other part, you have Indian Hume Pipe, which has received an order worth nearly 580 crores. So you could see some positive reaction on the back of that order win. And lastly, you have Keytex Garments, where the company has said that the board will meet on 25th April to consider further proposals for investment. So watch out for that name as well.
Bharti Infratel will be coming out with its 4th quarter earnings today, and on a consolidated basis it is expected to be a weak set of numbers. Now it is the consolidation in the telecom service provider space which is yet again going to impact this tower company. Like what happened in the 3rd quarter of financial year 2018, the 4th quarter will also see some tenancy exits because of shutdown of Reliance Communication, Aircel and Tata Teleservices. In fact, the 4th quarter results will also see the full impact of tenancy losses that happened in the 3rd quarter. In the last quarter, that is the 3rd quarter of financial year 2018, the company had lost close to 8,562 tenants on an absolute basis, but of them 5,600 continued to pay. So that full impact will be coming in the 4th quarter of financial year 2018. So on a consolidated basis, the headline numbers are expected to fall compared to the last quarter. Revenue is expected to be down by around 2% to 3,595 crore rupees, while EBITDA is expected to be down by around 4% to 1,554 crore rupees. EBITDA margin is also expected to contract to 43%, but on a flip side, the net profit is expected to be higher by around 5% to 616 crore rupees. Now this is because of higher other income and net interest income. Now the revenue is expected to fall for the first time in the last 12 quarters, while the EBITDA margin is expected to be at a 9-quarter low. Key things to watch out would include management commentary on further tenancy impact, management commentary and update on inorganic opportunities like the acquisition of Idea and Vodafone's stake in Industars, and lastly their outlook on tenancy growth in context of Reliance Jio.
Well, HDFC Bank's 4th quarter numbers came in line with street estimates, with the core earnings metrics remaining steady. Now, the net profit grew by 20.3% for the quarter. That's the 4th consecutive quarter where the PAT growth has come in excess of 20%. Operating profit, on the other hand, also managed to rise by a good 21%. That was driven by 2 factors. One is the strong 32% growth in the fee income, given that Q4 is generally a seasonally strong quarter, and you also had operational expenses which continued to tread lower. So in fact, the cost to income ratio for the bank during the quarter at 40.6% was at a multi-quarter low. The bank also said that they have not used RBI's dispensation to spread bond losses over a 4-quarter period. The marginal disappointment came in on the loan growth front, which came in below 20% or sub 20%. It came in at 18.7% for the quarter. That's mainly as the wholesale lending book grew just by single-digit number of about 9.5%. So that was a drag on the overall loan growth. On the other hand, retail portfolio continued to do very well, a 27% growth coming in, led largely by the unsecured loans like personal loans and credit cards growing at a faster pace. When it comes to asset quality, the headline gross NPA number remained more or less steady at 1.30%. Even in absolute terms, the gross NPA number rose just about 4% on a sequential basis. So asset quality was more or less well contained despite the RBI's February circular, and the provision coverage ratio rose by about 350 basis points sequentially to about 70%. So overall, inline numbers, no surprises as far as HDFC Bank is concerned.
Now, Friday was the day of technology stocks surging ahead. So let's have a look at what delivery volume did they clock there for themselves. For starting off with TCS. Now, that was up nearly 7% in trade and saw delivery buying in excess of 1,000 crores. The delivery volume managed to double for itself at nearly 32 lakh shares as compared to its 5-day average, and the total volume surged 150% at about 1 crore shares as compared to its 5-day average. The second stock to watch out for, HCL Tech. Now, that was up about about 4.5% in trade and saw delivery buying of nearly 250 crores. The delivery volume more than doubled for itself at nearly 23 lakh shares as compared to its 5-day average, and the total volume surged 120% at nearly 50 lakh shares as compared to its 5-day average. Last and final stock to watch out for, Cyient. Now that was up nearly 10% in trade after the company posted its results, and it saw delivery buying of nearly 90 crores. The delivery volume actually surged about 176% at nearly 12 lakh shares as compared to its 5-day average, and the total volume surged nearly 4 times at about 43 lakh shares as compared to its 5-day average.
The big brokerage calls for the day. First, we have Kotak Securities on the Buildcon. Now, the brokerage has initiated coverage on the stock with a buy rating and a target price of 1,365. Now, according to the brokerage, the Buildcon is well placed to leverage the significant growth opportunity in the road construction space and diversification into other EPC segment. Now, it says that the Bharatmala will offer EPC opportunity worth 3.3 trillion over the next few years, and because of that, it is expecting the company's order inflow to grow at a compounded annual growth rate of 8% over FY18 to FY20. Now, the brokerage is also expecting the company's market share in NHI ordering to expand to around 17% by FY22 versus 15% in financial year 2018. Now, the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 26%, 27% and 28% over FY18 to FY22. On the debt side, it is expecting the healthy order backlog and reasonable cash flow to service the company's debt. And lastly, it says that the Buildcon compared to its peer average is currently trading at a lower valuation. Second, we have a CLSA on Ashok Leyland. Now, the brokerage has maintained its buy rating but has raised the target price to 185 from 145. According to the brokerage, Ashok Leyland has been able to defend its market share even when Tata Motors was aggressive to gain its lost market share. Now, the commercial vehicle cycle has surprised positively, and on the back of that, the brokerage has raised its FY19 industry growth estimates to 13% from earlier 10%. However, for FY20, it is expecting the growth estimates to be around 10%. Now, according to that, the brokerage says that the scrappage policy could further lift the industry growth outlook. Now, the brokerage is expecting the company's EPS to grow at a compounded annual growth rate of 23% over the next 2 years. And lastly, it says that the expensive valuations of Ashok Leyland are justified given the strong earnings growth outlook, improved franchise and potential demand boost from scrappage policy.
There is about 80 million kilos of plastic floating around, which constitutes to 1.8 trillion pieces of ocean plastic inside the Great Pacific Garbage Patch.
you can stay tuned to Bloomberg Quint Live over the course of the day for all the live market action and all the updates in the world of corporate India. But there are also several stories that you can find on the website bloombergquint.com. So here's just a couple of them. In a couple of days, Chinese President Xi Jinping will host Prime Minister Narendra Modi in the country's Wuhan province. The two-day summit meeting that begins on Friday will be an attempt to improve bilateral relations. That's according to China's Foreign Minister Wang Yi. The Delhi High Court has asked the Reserve Bank of India and the Goods and Services Tax Council to respond to a plea that challenges a recent circular that prohibits banks and financial institutions from providing services that relate to virtual currencies. The Securities and Exchange Board of India is considering a forensic examination of the financial statements and disclosures made by ICICI Bank in the last few years. This is with regard to the ongoing investigation into allegations of conflict of interest in a loan that ICICI Bank advanced to the Videocon Group. Well, that's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.